Hey guys, we just had a dump on Bitcoin, so I'm going to take a look at it. I'm currently on the daily time frame, and in the last video, actually, you know what? Here, I'll zoom out to the weekly just to kind of give you an overview of where we're at. Okay, so quickly, we had this falling wedge, typically a bullish reversal pattern. We broke out of it, we retested it, as you can see from this wick right here, and then in the process of this move upwards from the breakout of this falling wedge, we formed a rising wedge, which is just the opposite. So falling wedges will typically break to the upside, rising wedges will typically break to the downside, and that's what we've seen in both of these two instances. Where we came up to was pretty much the most significant area on the Bitcoin chart, and it's right here. So take a horizontal line and draw it right between, like paste it right under these two candle bodies. And as you can see, when we came up, that's where we got the resistance at, right? So we had kind of like a double top here. Bearish divergence was showing, so we had basically we had a high, then a higher high on the oscillator. We had a high, then a lower high. So there was some bearish divergence. Okay, so from there we broke out of the rising wedge, came down, and right here I put out a video and a tweet, and I said, okay, right now we're forming a hidden bullish divergence, right? So basically that means the price put in a low, then a higher low, but the oscillator was putting in a low, then a lower low, right? That's called a hidden bullish divergence. That gave us an early indication that the price might turn upwards. So I'm going to switch it back to the daily time frame. And then we did get a pump up right after the hidden bullish divergence was forming. And this bullish candle right here was immediately following news that Grayscale won their lawsuit against the SEC. So I guess people are anticipating that an ETF is going to be approved soon, okay? So we came up here, and at this level, I pointed out that we're at a level of resistance. So actually, when we were here, when we were just breaking down, I kind of marked out levels of potential support, right? And this region right here had a lot of confluence, so I kind of emphasized it with this rectangular shape tool. So I anticipated this level to be a support because it was the 50% Fibonacci retracement level. Basically, if I run a Fibonacci from the swing low here up to the swing high, this is going to be the 50% region. And if you look to the left, you'll see that it was also resistance right here. So a lot of the times when you break a strong level of resistance, you can look to it as a support level, cut right through it. But now on the way up, it didn't hold as support, but it definitely is holding as a resistance right now, right? So look to the left, resistance here, and now we have this resistance level right here. If this level broke in the last video, I said look to this downsloping diagonal level of resistance just a little bit above here to also kind of bring in sellers to push the price down. Now, in the last video, I pointed out that when we were up here, and this is pretty much how it always works, the majority of retail traders are wrong. And right up here, like clockwork, right when we were at the resistance level, a lot of people entered longs with leverage, right at resistance, right? So I'm going to change over to here. So just so you can see, this is pretty cool. So this will show, this is like a liquidation map. It'll show us the liquidation levels on both the long side and the short side. So when we were at resistance, this red area looked like the green does now, and the green one looked like the red does now, right? So people were trying to long with leverage at the resistance. So I mean, the market like exchanges can see all this, right? This is from Binance. They can see that they have a lot of people longing resistance level, and if they wanted to move the market, they can just get everybody liquidated, right? Not saying Binance is doing it, but the big money has these tools. They can see the orders in the exchanges, right? So when you're at a level of resistance, and all the retail traders, the newbies, go long with leverage, they can just push it down and get everybody liquidated. So now we're in a situation where we're all the way back down, where this impulse move started, full on retrace. And now right here, after this big dump, look what the retail traders are doing. They're shorting, right? They're all shorting. Look at all this, right? So there's incentive now to push the price back up and take all these people out. Now, will they do that? I'm not sure. Would I take a trade here? No, and I'll show you why. If I go over here, this is the liquidation heat map. And as you can see, the way the price is moving, it's just wrecking people. So all this liquidation level here, it all got taken out. We had this area of liquidation levels that got taken out on a recent pump to the upside. And then now they moved it back down. They took out this liquidation region. But if you see right here, we have one more region that's still standing, and that's around 25,446. So will they push it down to take out these guys too and snatch up some liquidity before pushing it to the upside? Maybe. Again, that's 25,400. And if you look at this wick right here, pushing it right down to where this wick was would take out that liquidation level. Now, my initial idea was that we come down, then they push it back up, we get rejected here, then it comes all the way back down, breaking this level and coming down to this 24,500 down to 23,500 range. This is what I thought. This may still be in play. But now considering how many traders are shorting, they might not do that. They might push it up, wipe them out, and then push it down, right? Like trading's basically a game, and if you can look at the order books and you can look at the liquidation levels and then combine that with the levels on the chart, that's how you really get ahead. That gives you kind of x-ray vision into the market, and that's what I like to do to kind of guess where the traders are going to move the market, because you and me, we're not the ones moving the market. It's the big players that have access to all this data that are pushing the price up and down, right? So as of right now, I'm not personally looking to take a trade on Bitcoin. Of course, I have my holding portfolio, which I'm not going to touch. But yeah, I don't know how I would play this. I wouldn't buy here. Then I have to place my stop loss all the way below here, this wick, at around 25,265, and that seems a little bit risky for me, considering right around here is a big liquidation target that the traders might push it down to. But then again, you look at the order book and you see how many shorts are here, how many people are going to get liquidated if they push it up right now, right? So maybe the move is a push up, then a push down. That would probably make more sense. Take these guys out and then come down and hunt for these other liquidation levels. But yeah, so what I'm going to do now, I'm going to move it back out to the weekly time frame, and let's take a look at just the price action and the candles that we're forming. This right here, this candle's still in play, okay? But if this candle closes like this on Sunday evening, this is a very bearish candle formation. This is called a gravestone doji. Okay, you see how we have this long wick to the upside, so the price came all the way up, then the bears came in, pushed the price all the way back down. This is a gravestone doji, and it's a pretty bearish indication. More often than not, when you form a gravestone doji, the price continues downwards. So what I'm going to do right now, I'm going to invert the chart, and what you'll see, this is the candle inverted. And normally, if you see this candle, this is a dragonfly doji, and this will kind of give you a heads up that further upside is to come. But inverted, gravestone doji, it's not really ideal, but you know what? These candles don't always play out, and this candle has not closed yet, right? So remember, buyers can step in and just salvage this candle. We have, it's only Thursday. This candle closes on Sunday evening. So whatever, plenty of time to turn this candle around. And yeah, as for where I would enter, I think my entry point on Bitcoin would be if we come back up, if the price makes its way back up here and comes back again to this resistance. And at the time when that happens, it'll come to this horizontal level of resistance. And also it will be this downsloping diagonal level of resistance. It'll be where they kind of intersect. And this is where I would look to take a short. Or if the price comes down to this level right here, this 24,005 region, or this 24,006, maybe a wick down to 23,005. That's what I'm going to be looking for. And I'm going to wait for the candle to close for confirmation before, deciding to enter a trade. And I will use this level here to buy and I'll place my stop loss just below it. And that will give me a good risk reward ratio all the way back up here, or all the way back up until where this downsloping level of resistance is. But as of right now, I'm not going to enter just because I don't want to have to place a stop loss all the way below this wick, right? And again, because there's a liquidation target down here. So I'm just going to sit back and observe. Again, of course, I have my holding portfolio, but for my trading balance, I'm not looking for a trade on Bitcoin. Now, I'm going to take a look at some of the altcoin charts, and maybe I can find a better setup that will give me a tighter stop loss and a better risk to reward ratio. All right, guys, so that's just a quick update on Bitcoin. If you're not subscribed and you want to get updates when I release these videos, click subscribe, click the bell, click on all. If you don't do those last two steps, meaning you got to click the button and click on all, you're not actually going to get the notification when I release new videos. I do about 2 or 3 videos every single day. And if you want an exchange to trade these assets on, the one I'm using is linked in the pinned comment and the description. And I like it for a number of reasons. It's got a really good interface. They have a lot of coins, but most importantly, they have no mandatory KYC process, so you're not obligated to send in your personal information. It's optional. Okay, guys, that about wraps it up. Have a good evening. Take care. Bye.